Hey guys, what's going on? Coming at you with a Monday night video. So it's a little dark and gloomy here, but I'm gonna work on better lighting soon. But anyways, I wasn't gonna make a video tonight, but I decided I'm gonna. So I really just wanted to go over kind of the sentiment in the market and what I think and how important this week is for like earnings. So if you haven't followed my channels, I'm a long-term investor. This is a big week for a lot of retail investors because a lot of mid and small caps and like fintech companies are reporting this week. Some that I am in is PayPal, Shopify, I believe. What else? There's many other ones reporting this week, but the two big ones for me are Shopify and PayPal for sure. Both these stocks I've been in since 2020 or 2019, so they're fairly large positions in my portfolio. If you haven't watched my previous videos, I own about 20 stocks right now. I am going to tax loss harvest two of them at the end of the year to kind of offset my taxes and gains. I've had a very good year this year. I'm roughly up about, with the pullback in October, 25 to 27% year to date, so very good. But yeah, so basically, the Fed talks this week too, which is very important. We know basically they're going to pause. So there's, they basically kicking the can down the road, basically saying they're going to raise rates, or they might in the future. I mean, I know they're done. They made it. They just need to keep the neck on Wall Street, basically. So the second they say they're done or they're pausing forever, money's going to flood in. I think a lot of money is going to leave the bonds and then go into the equities and stuff like that. So they don't want to unwind all the progress they did in the past year and a half with raising the federal funds rate. So super important, but if you really look big picture, it's nothing concerning. Just I keep dollar cost averaging in my favorite positions. Meta, Google, Microsoft, they all had great reports last week. So it's funny when you hear Wall Street or CNBC or analysts come on, they're saying, oh, well, the stocks went down, or oh, we're due for a correction. Like, I mean, we just, October, the S&P from peak this year, I believe, is down like over 10%. So over 10% in the market is considered a correction. So we're just in the correction territory. I do think November is going to have a very strong month, in my opinion. I do think we're going to have an early Santa Claus rally. That's just my personal opinion. Historically, November is the second best month in the market of any month in the year. So I think April's number one, November's number two. So we're about to roll into November. So basically how I have it is I have about a 10% cash level right now. I am willing to buy stocks like if Shopify has good earnings and good, they beat EPS, good revenue or whatever, and their guidance is real good. Guidance is super important in this market. If Shopify has any kind of pull down, I probably will be buying it. So in my case, I'll be averaging cost up. I believe my cost base is like $27, $28 in that stock. It's a top 5 position of mine. But if it falls, let me just pull it up. I'm not going to share my screen just because I don't have a good way in doing it. But just looking at my Fibonacci rotation I do on Shopify, it is right under the 23% Fibonacci retracement. So it's sitting at $46.92 as I record this video. It is a little up after hours, but it is under the 200-day moving average and the 50-day moving average. So the stock definitely has some weakness right now. I could see it going to $60 a share. That would be the 23% retracement. So I could see it do that. Honestly, if it goes down to $40 or $35, like I said, I will be buying it if the guidance and all that's good. Amazon had good earnings, Google had good earnings, and Meta had good earnings and guidance. So like Shopify is a different business model than Amazon, but it's kind of similar in the same way. It's more meant towards like e-com and smaller businesses, but that is one I really do like. The forward PE on Shopify, yes, it's a little rich because they just started going profitable to 95 forward PE right now. So that is a little rich, but I mean, it's a super, super, super high growth stock. So something I'm not really concerned about. And then PayPal is literally on the ground. It actually broke my 0% Fibonacci retracement at $55. We're at $51. That stock is just getting hammered. That is a top 3 position of mine. So if you're not in PayPal, it's something I would really look into. The forward PE is a 10.3 right now. That is insane. Really, in my opinion, anything minus like banks and like really slow moving companies, which this is a growth company. So even like dividends or whatever, anything under a 10 PE for a growth company, they're basically pricing it in for bankruptcy. The reason I think everyone's so scared of PayPal right now is delinquencies. The consumer's running out of money. I think they're fine. I mean, just if Wall Street went out in public and kind of went places, they would kind of see that the consumer's still spending, like hands down. So like, I don't know why they're so freaked out about just like, it's not just going to go to a halt like out of nowhere. So I do think Wall Street has PayPal a little wrong. I mean, PayPal, I mean, even in an undervalued market, a slow growing recession market, as long as people are paying their bills and all the things they acquired in the past, and just the user growth with Venmo and all them, PayPal should be no less than an 18-20 PE, and that is still very cheap. So, I mean, this stock should be trading at anywhere from like $100 to $125 share. That'd be cheap. I think fair value is probably 150, 170 for PayPal, in my opinion. This is a super long position of mine, super long hold. It's a little overweight in my portfolio right now. It's my second biggest stock, I think. So that is one I'm really looking forward to Wednesday. I just see a thing pop up. It says UK Watchdog. Again, buy now, pay later, user. Just some crap. So yeah, but anyways, their PayPal's estimate EPS is 1.2. I mean, I think they're going to smash that personally, but I think their revenue growth, their user growth, and their EPS is all going to smash it because people are buying a lot, and I think the guidance is going to be very good for the holidays. That's just my opinion. So that's one to look out for. I'll probably make a video when those earnings drop Wednesday after the bell. I'll make a video at night and let you know my thoughts on both of them. But yeah, I mean, as of right now, what I'm doing, I'm sticking the course, dollar cost averaging. I'm looking forward to these particular two earnings this week. Apple's obviously a huge one. I believe they report Thursday after the bell. So I'm sure Tim Cook, he's like the biggest, person that will, no matter what happens with Apple, he's going to be very optimistic. That's just how he rolls, and that's going to keep the market up, in my opinion. I think Apple's going to have a very bad report this upcoming season. The big iPhone titanium, what is it, the 15 Pro Max, yeah, that one sells a lot, but like the middle and lower grade, like the average consumer, they're not buying them because they can't afford them right now. So that is going to be a headwind and a problem for them. But overall, that might pull down the market a little bit, especially like the NASDAQ. I think Apple's a big weight in the NASDAQ and really all of them, but that might be a little bit of a headwind. But other than that, I mean, the market today was green. What were my best ones? So Coinbase had a good day. I mean, I'm in Bitcoin. I'm gonna have to make a video about crypto later. Let me see what the SPY finished at today. I'm just curious. So the SPY finished up 1.2%. Very little pullback after hours. We're kind of in no man's land in the Fibonacci trace between 61 and 50%. If it goes down to if the SPY goes down to like 405, 407, I'm gonna have to buy something. I don't know what, because that's at that 50% retracement. So I'm really big with Fibonacci's. I mean, I think they really like the psychology of the market. People follow them. It's just an artificial line basically, but people really like Wall Street and traders really follow that stuff. So when it hits a line, usually you get some resistance, and then from there, usually when you hit you test a new line, there's usually good buying ops for like your stocks if you kind of want to not time it, but like you're getting a good deal for you're slowly just fighting those lines. So yeah, so that's what I got. So I'm trying to get to 1,000 subs by the end of this year. So if you guys like this video or want my insight on earnings coming up, make sure you subscribe. Let me know if you guys are buying Shopify or PayPal or selling, or what your thoughts on that. Till tomorrow, peace.